Hey everyone, good morning. It's Justin. How are you all doing today? So, today, let's talk about the FTX, Binance, collapse of the cryptocurrency industry thing. I think we touched on this the other day, and I mean, it's still around, still going on. Crazy part is this whole thing has shown just how corrupt having these exchanges can be and how detrimental it can be to our financial system when everyone is incestuously over leveraged with debt. It's crazy. So we've come into this environment now where the Federal Reserve prints so much money, it becomes very hard to find return. It's very hard to, make any interest or any money off of the money you have, because you're trying to, get something out of like something that's already bleeding dry. It's just not easy to do. This crypto thing, so for those of you who don't know what's happening, FTX is a crypto exchange, meaning it's an online, or it's just a company that they take your cash or your US dollars or whatever, your Canadian dollars, your pesos, etc., and mostly US dollars, and they will go on to the blockchain and they'll place an order for you, or they'll buy a cryptocurrency, and then they hold it under their ledger or in their wallet, and they put it under your name and their accounts. Okay. It's kind of like a brokerage. You can do it yourself. You don't need it. But here's the real funny part. They took all of the money that they had from customers, and they, kind of as liabilities or whatever. But they went and they made their own cryptocurrency they made a coin called, I believe it was FTT. FTT was an altcoin, I guess you could call it, that was not a decentralized, coin. It was a centralized coin, a token by FTX that wasn't autonomous like Bitcoin or other cryptocurrencies, and it was nonsense. It really had no utility. So they take half of the coins they make and they sell them out onto the open market, right? And the way that they sell them is basically you're kind of like buying shares in a company, because they're saying that we have cash on hand from all of the exchanges we do all the time, and we back our coins essentially with our profits. So they then sell half of their coins, and the coin's value goes up, and then they say now the half we have is also an asset. So what do? They go out to banks, a lot of banks, and other crypto exchanges, and they say, hey, give us a loan because we have the FTT coin that we made up, and it's backed by our cash that we have on reserves, which was very, very little. And then they said, we'll take a loan from you guys, and we'll use our FTT coin as collateral, so that if anything ever happens, you just take our coin. I mean, if that doesn't sound like a recipe for disaster, I don't know what is. Long story short, they levered up and took so much loans, and then they had people's cash, right? So that the point that they had $9 billion in liabilities, right? Which, okay, it's not too bad. But then they only had $900 million in assets. So 1,000th of all their loans had collateral, or whatever you want to, however you want to say that. So as you might understand, some people, they started selling off the coin, right? Because crypto in general has been selling off. And as it came lower and lower and lower, on all the loans that they took out, they started having margin calls. And when they started having margin calls, they couldn't cover their calls. And then, you know, they ended up going bankrupt. They went bankrupt, and then their balance sheets got exposed. Everyone saw these numbers. It was a nightmare. Tons of people lost money. I think it was $100 billion in customer accounts was lost. $100 billion, I believe. That is a mind-numbing number of money that people had, or currency, just gone. Because it's essentially a bank that went insolvent or bankrupt. They're not called banks, though. They're called exchanges. It's the same principle, same concept. And now, the really sad part is that it's dragging down the whole crypto market's value, right? Because everyone's having to sell their other stuff because they're bankrupt now, right? They lent all this money to them. I think Binance is the next one. And, everyone who held FTT coins or whatever, they've lost all their value, and they took loans out against their FTT coins. They're done on those, so they have to take that loss. And all these banks, it's like free banking, right? But everyone lives in an environment where the actual banking system is not a free bank. It's the central, Federal Reserve System bank, and they're trying to use the same, irresponsible practices or methods, but there's no, way to cover themselves, because the way it works, the real banks, or I should say, normal banks, is the backup plan is you get bailed out by the government. I don't think these guys are going to get bailed out by the government to stay solvent. Other crypto exchanges are trying to bail them out to help them, because they're just trying to save themselves, really. Because they have loans against their cryptocurrencies. And if the whole crypto market falls to like 10,000 or whatever for Bitcoin and other things, then they're also going to go belly up. Which, it's really sad news, but I'm also kind of, I don't want to say rooting for it, but I would like to see people who take irresponsible loans, who can't cover them, lose. Because it gets rid of all the malinvestment, and it allows for cryptos to just go back to what they're supposed to be. And that is a completely free market banking system, or currency system. But the problem is, I think this will be a great excuse for the politicians to come in and set up all this regulation for crypto like they really wanted to do. Because everyone lost their money, and they're all victims, and they have to be saved by Big Daddy government. And all these rules are going to be put in place that can be an exchange, their reserve requirements, if you're even allowed to take custody yourself. So we'll see how it plays out. But just as a little note, Sam Bankman-Fried, the guy who ran this whole FTX thing, his college professor, I think it was at MIT, is also the head of the SEC. Crazy. And their chief engineer at FTX, this girl, I can't remember her name, she dated Sam Bankman, whatever. And this girl is the daughter of, I believe it was also an MIT professor, who used to be like a dean of the school or something like that, who oversaw, who was the boss of the SEC, the current SEC guy, who, when he was a professor. And that's not suspicious, I don't know what is. I mean, and then on top of all of it, the FTX thing, they were taking donations, but they had a fund where they sent money over to Ukraine from the Democratic Party, Ukrainian government, so that they could be helped out. I don't know what's going on. And the thing about cryptos is it's on this ledger system. It's just wallet to wallet, but you don't know the owners of the wallet. Anyway, we see how this is going to play out. I suspect that it's actually going to spill over into the financial sector and actual banks in the United States. We'll see how it goes, because they gave loans, and those loans are going to go into default. Who knows how much they gave them? They could literally cause some banks to become insolvent and take cash out of their customers' accounts, or FDIC insurance to kick in. Who knows? Let me know what y'all think. That's it.